Hi everyone, and welcome to Investing Strategies. It's Alissa Coram with Investors Business Daily from the Nasdaq market site in Times Square. And this week we're focusing in on the ESG investing trend. And MSCI's head of ESG research is here to talk about the methodology behind its ESG ratings and the development of MSCI's ESG indexes, many of which are being turned into ETFs. Plus, we're taking a look at a few stocks that made the just released IBD ESG 50 list, an elite group of companies with high ESG ratings and high IB composite ratings. And we're sitting down with a Nasdaq analyst to learn more about key ESG issues from an investor perspective and what companies are doing to address those concerns. Investing Strategies starts now. Okay, let's begin with this week's market insights. The major indexes dipped last week, ending their multi-week win streaks. We saw the Nasdaq Composite finish down 0.3% for the week, but that was after rising some 7.6% in the prior 7 weeks. The tech-heavy index has also been able to close above 8,500 since November 15th, even with multiple tests of that psychological level. Plus, breakouts from top stocks are working and more sharp-looking chart patterns are forming. The earnings picture remains bright too, and in the IBD 50 list of leading growth stocks, the median Q4 EPS estimate calls for a 20.5% rise year over year. All that together presents a strong case for the bulls and a market rally that could last through the end of the year. But investors should definitely keep a close eye on the action in the major indexes and individual stocks in order to act quickly if the market takes a bearish turn. And with that, let's turn our attention to this week's spotlight on ESG. For the uninitiated, that's environmental, social, and governance. And many investors are now incorporating ESG filters in their investment decisions. Investors Business Daily just released an ESG special report, and we partnered with MSCI to come up with a list of 50 top stocks that not only have high ESG ratings, but they also have top-notch fundamental and technical IBD characteristics too. Here with me now to shed light on the growing ESG investing trend is Linda Eling-Lee, head of ESG research at MSCI. Thanks so much for joining me today, Linda.
It's great to be here.
All right, so the fact that we have all of these companies that have not only strong ESG ratings, but are really making strong price gains stock-wise too, what does that say to you?
Well, I think that it really makes a great deal of sense to put them together the way IBD has. And I think that it's great for two reasons. One is that when we think about high quality companies, they can be high on financial quality, but also for ESG, really what we're trying to measure is their resilience to long-term emerging risks and opportunities. So you're kind of doubling up on higher quality companies. And the second reason is that our research has shown that financial quality and ESG are actually correlated. They're not quite the same thing, but they are correlated, so at least you're going in the right direction when you combine them together this way.
Okay, so let's drill down just a little bit and talk about what goes into the ESG ratings. How are you coming up with them?
So the ESG rating is aiming to capture the resilience of companies to emerging ESG risks and opportunities relative to their industry peers. So the way to think about it is that it's a competitiveness measure really in an industry where ranking companies from the ones that are the best at managing their ESG risks to the ones that are maybe a little bit more of a laggard. So a few things to know about these ratings. The first thing is that they do range from a top of a AAA to a CCC in every single industry. Now this is not a case where we're going to give the healthcare stocks all the A ratings and the energy stocks all the C ratings. They really are actually industry relative rankings. And then beyond that, the most important thing is that these are industry specific. So that means that for every single industry, what goes into contributing to the ratings is going to differ quite a lot between one industry and another. So if you have a utilities company, what actually contributes quite a lot to the ratings might be carbon emissions, its water use. But for a food company, it would be a totally different set of financially material ESG factors that might contribute. So it would be food safety, for example, or supply chain management. And then the third thing to know is that it's really a gap analysis. What we're really trying to measure is the level of exposure that a company has to an ESG risk how well they're managing it. And then finally, for all the different companies, regardless of their sector, we're really looking at the strength of its governance, the corporate governance, and how well aligned the management's incentives are with shareholders is a really fundamental part of a company's ESG rating.
Interesting. And yeah, it seems like maybe for the millennial investor, they might be more familiar with perhaps the E for environmental, S for social, but less familiar with governance. But that seems pretty key to the metrics.
Yeah, we definitely think of that as being really the foundations of whether or not a company is well managed and has great, strong oversight, right? So I think that the extent to which you can trust whether a company is managing and monitoring its environmental or social risk really need to rest with the foundation that the company is actually well governed.
Right, and you mentioned that depending on which industry the company is in, the metrics or what factors you're looking at are a little bit different. So how does MSCI go about capturing insights from data that might be hard to mine?
Yes, this is a very challenging area in ESG, is the data. And we really are looking at about 1,000 different metrics that we're putting into the ESG rating of any given company. You can think about them in sort of two buckets of data sources. The first bucket would be company disclosed information, and that would include company self-disclosure that are regulated, so their financial disclosures, as well as things that they would like to disclose that are voluntary, so things they put on their website about their human capital management strategies, or perhaps their sustainability reports. But essentially, these are self-reported corporate data that makes up maybe 40 to 50% of an ESG rating. The remainder is actually coming from a lot of other alternative data sources. They include government databases, so we just very, very strongly monitor sources such as product safety recall databases, consumer complaints bureaus, anything like that, health and safety statistics. There's also news sources. We are monitoring around the world in many different languages, all of the news that may actually produce controversial cases around companies around the world. And then finally, we also really use academic and NGO databases, where what we're doing is looking at things like the map of the world where there are areas of water stress, for example, and we can overlay that with companies' operations to get a sense of where there might be environmental stress in their operations.
And MSCI is also making these ratings accessible to the public now, right?
Yes, actually, we had a very exciting announcement this morning that we rate about 10,000 issuers, and that's 7,500 companies or so, and we've made the ratings of 2,800 companies available to the public. If you go to MSCI.com, you can simply search for a company and its rating will come up.
Awesome. And not only can investors get into the ESG trend by investing in individual stocks, but also ETFs are becoming increasingly popular, and ESG related inflows. I think it's been a record-setting year for that. And we do have a lot of ESG ETFs that are based on MSCI ESG indexes.
Yes, absolutely. So from an index perspective, MSCI is a leading equity index provider with over $15 trillion of assets that are tracking MSCI indexes. And within that segment, there are ESG indexes, and we calculate up over 1,000 ESG indexes. And so this is a wide diversity of indexes because investors have very different demands and objectives when it comes to integrating ESG. The kind of landscape, maybe if I can give you some of the landscape around ESG indexes and then the ETFs that are tracking them. On one end of the spectrum, you have the more thematic indexes that are trying to get exposure to very specific themes. So the Global Environment Index, for example, would be maximizing exposure to clean tech companies. You're going to get a lot of sector concentration in that type of a theme. Gender diversity is another very popular theme. So the Empowering Women's Index in Japan, for example, is something that the government pension plan there has allocated several $1 billion to tracking. It's selecting companies that have demonstrated a greater ability to retain and attract women, which is an important policy objective in Japan. Now, at the other end of the spectrum, where I think a lot of the ETFs are starting to track track are the indexes that are designed to meet the objectives of investors that still want to be fully diversified. So they actually do still want the same exposures to the different sectors and the different geographies as a market cap benchmark. However, they want to be able to dial up the ESG exposures of those indexes. And so what we do is look at take a market cap-based index, and what we do is we weight the companies that have higher ESG ratings or that have higher ESG profiles. So the MSCI ESG Focus or the MSCI ESG Universal indexes are doing that for investors that want to track them.
Okay.
And then in terms of the ETFs, there are now 165 ETFs that are tracking one of the MSCI ESG indexes, about $21 billion of assets now. And we really see the trend for ETFs really focusing on the end of the market where it is actually looking at the full sector exposures and really just trying to weight the companies that are constituents of these indexes that are higher in terms of ESG profile.
Okay, so we do have a range then
Range.
of indexes and ETFs. Can you talk a little bit about the development of some of these more custom indexes, perhaps?
Yeah, so we see a wide range of indexes that our clients are looking to develop, and some of them will then put ETFs on to track some of these indexes. So some of the trends that we see are in terms of themes. Climate is a very big one. I think that there is a lot of focus on looking at indexes that have more of a climate aware characteristic to them. So we also see a lot of interest in marrying factors with ESG. So these are smart beta type of indexes that have an ESG overlay. You're going to see a wide variety of ETF options and fund options more generally, I think, over the next couple of years, because the pipeline is really very full for new ESG products.
Right, and then I think with that, where do you see the future of ESG investing headed? Clearly, there's going to be a wider availability and array of vehicles for investors to really gain exposure to this trend, which seems to be an increasingly important lens through which people are making investing decisions.
Oh, absolutely. And one thing I think in terms of gaining exposure in your portfolio to ESG, you don't have to limit yourself to just the funds or just the ETFs that have an ESG label or a sustainable investing label of some sort. The tools and the data are now available for you to be able to look at the ESG characteristics of all funds and ETFs, right? So we actually at MSCI provide ESG fund ratings for over 35,000 mutual funds and ETFs, and you are able to look at the ESG quality of all these funds, as well as certain ESG metrics such as the carbon emissions of each of these funds. So it's much easier now to be able to compare different funds, whether or not they call themselves sustainable or ESG.
That's a really good point. Thanks so much for bringing that up and for shedding light on this really rapidly growing area of investor interest. Thank you, Linda. And coming up next, I'll be getting technical with some of the stocks on the IBD ESG 50 list. We'll be right back.
Are we ready to do this?
Okay, here we go.
Good morning, everyone, and welcome to IBD Live. IBD Live is for just about any investor.
IBD Live is a look behind the curtain.
It's kind of bringing our subscribers into that whole conversation that we're having on a daily basis.
You're just going to be fully immersed in the rules of growth stock investing.
I think IBD Live, honestly, is probably one of the best values out there because you get to leverage off of others' experience.
You're going to speed up your learning curve dramatically.
If you really want to know what's happening right now, what can you do today, IBD Live is where you should be.
If you capture one or two of these stocks, it's going to pay for the subscription itself.
Learning in the stock market is a lifelong adventure, and I think IBD Live helps make it an exciting and hopefully a profitable one.
Well, it turns out out that finding companies with top performing stocks and strong fundamentals doesn't have to mean a trade-off with environmental, social, and governance values. IBD recognized 50 companies with AAA or AA ESG ratings from MSCI and ranked them by composite rating. That's a proprietary ranking from IBD that looks at key fundamental and technical metrics, including earnings and sales growth, profit margins, return on equity, and relative price performance. Microsoft and Edwards Lifesciences are two top stocks that made the list, so let's analyze them, starting with Microsoft. Now, Microsoft earns a AAA ESG rating from MSCI, and at the time of IBD's ESG report, it had an IBD composite rating of 96 out of 99. And Microsoft has been on a strong run this year. The tech giant has provided investors with several buying opportunities along the way. We had a breakout from a cup with handle base back in February, a flat base breakout in June, and another flat base breakout in late October. Microsoft is now about 5% above this 142.47 entry. And we can even get a closer look at that on a daily chart. Now, you want to make sure you're buying a stock within the 5% buy zone. That way you're not chasing a stock. The more extended a stock gets from a proper entry, the greater chance it has of pulling back. Now, in terms of fundamentals, Microsoft has now had 5 quarters in a row that both earnings and sales growth were in the double digits. And analysts expect double-digit earnings growth to continue on an annual basis in the next fiscal year too. Among Microsoft's ESG initiatives include the creation of a chief privacy officer position to tackle data privacy concerns and the formation of an internal group that looks at ethical issues surrounding artificial intelligence. Now, pivoting over to Edwards Lifesciences, a med tech company that makes replacements for patients with faulty heart valves. Edwards earns a AA ESG rating from MSCI and has a highest possible composite rating of 99 from IBD. Since breaking out of a cup with handle base in late July, Edwards Lifesciences has gained some 23%. Shares have rebounded off of support at the 10-week line along the run, providing investors several opportunities to add to their positions. And for investors who feel like they missed their chance, wait for another proper entry to form before buying. And like Microsoft, Edwards has strong fundamentals too. The company has had 2 quarters in a row of accelerating sales growth and 3 consecutive quarters of accelerating earnings growth. Last quarter, earnings jumped 32% while revenue grew 21%, and analysts expect the double-digit earnings growth to continue in 2020. From an ESG standpoint, the medical device company has improved its quality controls, and in turn, it's seen a decline in product recalls with only 4 in 2018, down from 14 in 2015. Okay, when we come back, we're discussing key ESG issues for investors and what companies are doing to address them. Back in a minute.
This season on Cultural Capital, we are in New York City and San Francisco. Come with me as I tour some of the world's most innovative companies, from Squarespace to C3AI, Giphy, and Figma. Learn how CEOs built growing companies while maintaining the ultimate office culture on Season 3 of Cultural Capital on the brand new Nasdaq.com.
Welcome back, everyone. And joining us now to talk more about key ESG issues for investors and what companies are doing to address those concerns is Alissa Basova. She's a senior analyst on Nasdaq's Strategic Capital Intelligence team. Thanks so much for being here, Alissa.
Thank you.
All right, so from Nasdaq's perspective, can you give us a bit of an assessment of the ESG landscape, because this is something that is popping up more and more on investors' radars?
Yeah, so what we've been seeing is there's an evolution of the balance sheet. What that means is that corporates' intangibles have been growing pretty rapidly, intangibles such as brand value, customer loyalty, intellectual capital. And these intangibles are very hard to quantify. So investors are inevitably forced to go and look for alternative ways of developing and, understanding their research. And ESG Framework has been able to provide quite a few good insights on that front so far.
Okay, and so then from an investor perspective, what are some of the ESG factors that are of most concern? Because at the end of the day, I think investors, what they really want is performance.
Exactly. So investors' goal is to generate alpha. So first of all, they would care about those metrics that would be overlooked within the conventional financial analysis, and then those that would be considered financially material. What that means is that those metrics would have impact on the long-term financial viability and operating performance of a company. So for example, within the pharma space, product quality and innovation and safety would be considered much more financially material than supply chain management.
Okay, and then when we're talking about, E, S, and G, so there's a lot that I think is kind of packaged into that.
Yeah.
And I think it's also nice, like maybe it's a nice cherry on top that, if a company is doing something good for the environment, but how that's actually impacting the company and its long-term health seems like it's a pretty key thing to look at.
Yes, exactly. And first of all, there's been a ton of research done year to date and over the past few years that shows that there is a strong correlation between good ESG rankings and long-term financial performance and operating performance of a company. And in addition to that, we've been advising companies to really, see how their core peers are doing and, try to understand why their ranks may not be on par with their core peers, and also try and understand, what their look at the opportunity cost and try and understand how many resources, how much money and time they can realistically allocate to the ESG efforts. And once that's done, develop a strategy and start implementing it.
Okay, so when companies are looking at their position in the ESG landscape, how is it that they can really move ahead in their peer groups? It looks like it might take effort if you're falling behind.
Exactly, and it would be very unfortunate because they would immediately get knocked out of a lot of investors' screens if they're not performing in terms of ESG, but performing on all the other levels in terms of the financials and business metrics. So we would say transparency is very important. Really, reporting year-round, not just when agencies reach out with their surveys, but having a person or a team in place on staff that deals with it throughout the year. So I think that's one of the important points to note here.
And then what else should they really be doing to take solid steps towards improving perhaps not only their ranking, but maybe perhaps investor perception?
I think trying to get into one of the major indices such as Dow Jones Sustainability Index would create amazing visibility. There's been some talks about even ESG audit. It's not really viable yet, but starting to think about that is also one of the really good options.
Okay, so and then when you're saying ESG audit, it's I guess maybe looking beyond the numbers or the data that's reported, but really taking a fuller look at what's happening.
Kind of like accounting audit, but within the ESG space, we think that's the next step. That's where we had it.
Okay, well, we'll definitely keep an eye on this trend. Thanks so much for your insights today.
Thank you.
All right, and thanks everyone for watching Investing Strategies. Next week, it's a Cyber Monday special. That means we'll be analyzing the holiday shopping scene and taking stock of retail and e-commerce winners and losers. Plus, we'll be taking a look at an ETF that's tracking internet-enabled innovation. Until next time, I'm Alissa Coram.